The last 24 hours was a wild day out there in the stock market, and looking at the S&P 500, you may not see what I'm talking about. However, when we come over and look at the futures markets, look at the massive moves that we had up last night. S&P 500 rocketing up 84 points all before the market opens, and look, we erased all those gains out here today. So what is in store for tomorrow? Is Trump going to get his way? Now, last night, it was all about federal court blocks Trump from opposing sweeping tariffs under emergency powers. And that's what caused that massive move on the way up. But something that tripped me up, if you guys were on the live stream today, you heard me talking about I lost my 20 Apex accounts. I lost my Take Profit Trader account, and I hit the daily loss limit in the My Funded Futures and Take Profit Trader accounts. And part of the reason for that was last night, we know NVIDIA had earnings coming out. And after the bell, we saw NVIDIA going up, but notice what we did not see. After 6 o'clock or so, once the markets reopened up, look at NVIDIA kind of flatlined out here, not really moving on the way up. That sucked me into a dangerous trap. On this move up, I was watching NVIDIA saying, I do not believe this move. I think it's just a little bit overdone. And next thing I know, prop accounts went kaboom. Now, speaking of prop accounts, now I want to make you guys aware of 3 amazing prop firm deals out there. Apex Trader Funding, 90% off all their evaluation accounts. My Funded Futures, 30% off the Starter Plus plan. And if you're new to My Funded Futures, 50% off all their evaluation accounts for the first account. Then last but not least, the prop firm with the best payout policy out there, Take Profit Trader, 30% off all their evaluations and no activation fee. To take advantage of these offers, use the links in the description box down below. So now as we come over and look at how the indices fared across the board today, notice the Dow was up 117 points. The NASDAQ was up 74 points. S&P 500 up 23 points, with the Russell 2000 being up 0.62. We come over and look at advancing issues versus declining. We had 64.9% of issues advancing on the day. Then as we come over and look at the sectors across the board, only one sector was in the red: communication services. Healthcare and real estate by far outpacing everything else. So we got to ask ourselves this question real quick. If we come over and look at the S&P 500 and the NASDAQ, why could we rally up all night long only to see those gains evaporate? We had a couple of headline stories out here today. We look right here, Trump tariffs tally $34 billion and counting. That's what they're saying it's going to cost in order for these tariffs. We already know that last night a federal judge blocked those tariffs. Then today we got a second federal court blocking Trump's tariffs. So it's not looking good on the tariff front. Now, here's some things that a lot of people aren't thinking about, like, oh, no more tariffs. Everything's going to be good. But what about that big, beautiful bill? How the tariff ruling could make passing Trump's mega bill a lot harder. Keep in mind, part of what's in the mega bill has a lot to do with being able to collect revenues from those tariffs. Now, if they cannot collect those tariffs, what do you think that's going to do to the chances that the U.S. people are going to be able to get tax cuts? Let me know your thoughts in the comment section down below. Now, today, Powell also met with Trump, and he stressed he would be non-political. And what Powell's basically saying is, we got to get this tariff situation under control. Then if we can get that under control, guess what? Maybe then we can start talking about lowering rates. If we come over and look at the Fed watch tool, we still got 19 days until the next FOMC meeting. We come over and look at the probabilities, and we can see nothing has changed. They're still not projecting the first rate cut coming in until the FOMC meeting on September 17th. Now, when we come over and look at the fear and greed index, right now we're dead smack in the middle, sitting at 64. So we didn't budge, go a little bit more towards neutral or more greedy today. Then we come over and look at the most recent investor sentiment survey. The bullish reading did drop down a bit. We came in at 32.9. We can see the historical average is 37.5, and we can see the bears jumped on board once again at 41.9. The undecided or the neutral category basically stayed the same, went from 25.6, dropped down to 25.2. So when we come over and we start looking at some of these charts, this is something that we talked about in Sunday's video. Was the potential, are we going to rally up, potentially get either a lower high or a double top situation? Well, here we are. We got top number 1. We have top number 2. Now, the second part of this is, are we going to be able to break this swing low right here? If so, that would validate that double top pattern. Now, if we want to go ahead and measure where this double top pattern would complete at, we want to come over and grab our Fibonacci extension tool and just click right here at the top swing point draw it down to the second swing point, click again, and we can see we get a price completion at 55.93. If indeed that pattern does play out, that would be enough for the market to come all the way down, fill in that major gap that we've had. So we'll see if indeed that can take shape. Today, the volatility index did not really budge, was down 11 cents on this session. We look at the dollar index today gapping up with a nasty reversal out there. And then we look at the precious metal gold. Gold today still right in this channel. Until gold can break this upper trend line, I still want to go ahead and give it the benefit of the doubt that we're going to turn and come back down. If we break that trend line, then you know what? We're probably going back towards the box, going back to making new all-time highs. Now, jumping back over and look at the SPY on the 4-hour chart. Here's a trend line that we drew out in this weekend's video, basically connecting the highs where we were able to look above that. Boom, right back down. If we look at the MACD indicator, it does have a bearish cross to the downside. We look over here on the 30-minute chart, we can see we had a large ranging day, but look at the profile shape. It looks very similar to the prior day's profile shape. And something I always warn about is when we get a D-shaped profile, the first break quite often ends up being nothing more than a trap. And that's exactly what we had transpire today. Today, we gapped up above yesterday's high. Boom, we came smacking right back down. So as soon as we got back below the high of yesterday, guess what? The first target came in at value area high, then the point of control, and then value area low. But let's not forget, if things start to sell off possibly tomorrow, look left. What do we have down here? We have a major, large gaping gap. We can start to target gap support, 584.34. Then potentially the gap being filled, or maybe even this structure breakout point we broke out from about 581.84. Now, if we come over and take a look at the futures markets real quick, look at the 4-hour chart. We can see that last night we were able to go ahead and spike above the recent high over here, and then we got a reversal right back down. We look at the weekly profile. We also have that D as in dog shaped profile, but something that's very interesting. Look at last week's profile. Look at where the smallest area, the valley within the profile, and look at what we've built out this week. We spent a lot of time in this area kind of building out this level. Now the question is, are we going to start working our way back down, trying to test the point of control from last week and even value area low? Notice we've already been above value area high. Now we're down below it. So now our attention then turns down towards that point of control, then towards value area low. We start breaking that. Then I want to focus over here towards this next high volume node at a price point of about 58.15. Anything below that, then I want to turn my attentions back over here towards gap support, then the gap being filled from May 11th, then that untested point of control that we have down here about 56.78. Jumping over, taking a look at the daily volume profiles on the 30-minute chart. This is one heck of a B as in boy shaped profile, lowercase b. We had the big push up. We came all the way back down, and look at where all the volume was built at the lower end of the range. So guess what? If we start breaking down below value area low, we're likely going to go back, retest the lows from today. We break the lows from today, then we really jeopardize coming down substantially lower. You can see that today we're able to spike below the low of yesterday. We were able to recover it, but if we come down there again, I don't think we're going to be so fortunate next time around. Now, if you look at value area low, that'll come in at 5907.75. Point of control is 5915.75, with value area high being 5944.75. Now, something else that we do want to do, grab your Fibonacci retracement tool, measure from the swing high all the way down here to the swing low today. Now, we did have a larger range today of 124 points. Notice where we came back up to. We came right up to the 38% retracement. That is the place that the market first finds a little hesitation. Quite often it'll be an area where we reject back down a little bit, or we start to consolidate near that area. If we come back up here again, expect this to break and come somewhere between the 50 and even 61.8 fib level. Then if we turn from that area, that could set up a massive A to B equals C to D pattern on the way down. Now, if we're going to break to the upside or to the downside, what is going to be the catalyst that really gets us rocking and rolling in either of those directions? If we come over and look tomorrow at 8:30, we get the core PCE price index, which is the Fed's preferred measure of inflation. 9:45, we get Chicago PMI. Then at 10 o'clock, we get revised consumer sentiment, followed by revised inflation expectations. Then we have some FOMC members speaking throughout the day. So we do have a little bit of news that could go ahead and validate any of these patterns that we see setting up. Now, if we come over and look at the QQQs real quick, Q's kind of overthrowing that top number one. However, we got right back in the range. So I'm still going to go ahead and count this as a double top pattern, assuming we can break below the swing low over here at 505.89. If we never break that swing low, then it's not going to be a double top. It will not be validated. For all we know, this could be an upper level consolidation on the march up to making a new all-time high. At some point, though, we should be able to come down towards the 38% retracement. However, since we made a new high today, we have to adjust that Fibonacci retracement level from the swing low right over here on April 21st all the way up to the high from today. Now, notice we also have to adjust that double top target as well. Measure from the high point down towards the swing low. That gives us a price completion at 484.79. Well, if we look left, notice that would also be enough to fill the gap, and it would be enough to come down towards that 38% retracement, which is the first area where the market usually finds some type of hesitation. MACD on the daily chart kind of flatlined after being above the zero line. Then we come over and look at the 4-hour chart. Notice the MACD indicator does have a bearish cross. We come over and look at the 30-minute chart, and look, we have that B as in boy shaped profile. You can see where a lot of that volume has been being built out. However, if you're looking to be on the sell side, we do also want to be mindful that the MACD indicator is now back towards the zero line. That could be nothing more than a recharge point for another leg higher. Now, if you thought all the drama is over with all the tariffs and whatnot, let's not forget, we can see that Trump has already talked about appealing this to the Supreme Court, and now we see appeals court temporarily halt ruling against Trump tariffs, and U.S. appeals court reinstates Trump's tariffs during the appeal process. So all this back and forth is not over with, and something I want to warn people about. As we're going over and looking at these charts, a lot of people are like, you know what? The tariffs are gone. We have nothing to worry about. Well, let's think about this real quick. When Trump got slapped by the courts last night, we seen the markets rocketing up. But why did we come back down? And think about this. If countries get too complacent saying, you know what? He's not going to be able to instate the tariffs. We are good. We don't have to negotiate. Guess what? That 90-day pause is going to come up very quickly. And what happens if in the end, the courts ultimately rule, no, Trump can impose those tariffs? Then maybe we're just kicking the can down the road, and there's going to be hell to pay later on down the road. So just keep that in the back of your mind. We can see on the weekly profile, we have a lot of volume been built out right around this area. We've been above last week's value area high. We're back down below it. We've already hit target one being the point of control. Next target is down here about 21,191. Coming over and looking at the daily profiles real quick, notice a lot of volume being built out at the lower portion of the range. Now, I would want to grab my Fibonacci retracement tool, measure from today's high all the way down to today's low. We have not made it back up towards the 38% retracement just yet. So if we do start to bounce tonight, the first area I would want to target would be that 38% retracement. We breach that. Then I look to see, can the market find some type of reversal between the 50 and 61.8 level? If we do, that could set up a massive ABC pattern on the way down. Now, if you look at the value areas, value area low is going to come in at 21,317 and a quarter. Point of control will be 21,408.75, with value area high being 21,598.25. If we break value area low, watch out. We're likely going to go lower. Some of those targets to the downside, let's not forget, we have an untested point of control, 20,938. Now, do I think we're going to make it all the way down here tomorrow? Probably not. However, I still want to be mindful of that target. And also near highs and lows of the markets, we usually see the ranges expand. And that's exactly what we had today. Big look above, boom, right back down. And yesterday was a D-shaped profile. So we got to be open to the idea that that rally last night was nothing more than a major trap, and we could start to see some selling pressure in the market in the very near future. Now, if you guys want to learn about 3 hidden rules inside a take profit trader, make sure to watch this next video right here.